and Steve Dudash, President of IHT Wealth Management. It's great to see you both. Thanks for being here.
Thanks for having us.
So, Chris, tell us what you're thinking about the market. Before we get to all the picks and everything, what are your thoughts on the market these days, on the best week of the year?
You know what, this is one of those markets when you look at it, and I wrote something earlier this morning to some of my clients where it's almost like a dog looking sideways saying, really, is this what's going to happen here? I mean, we've gone through the ringer with the trade tariffs. Now we've got interest rate scenarios coming into play. When I look at it, over the last week, Nicole, we hit an oversold reading on the S&P 500. So it was natural to see a little bit of a bounce in stocks here. That kind of got a little punch drunk with the talk of interest rates going down sooner than expected. And then the possibility that we may not see the tariffs go in place with Mexico. So investors are jumping all over this right now, and perhaps a little bit of overreaction. Technically, the market is still in a questionable territory. I mean, we've leveled off with the 50-day moving average on the S&P 500. The VIX still hasn't broken down below that 15 level. So volatility is something that's going to be here to stay. And I think we're probably going to be questioning whether or not this move in stocks this week was really something that people should be buying into. You know, frankly, these rallies have been something that a lot of traders have been selling into this strength. So that's my expectation as I look into short.
All right, so a little punch drunk, maybe, selling into some of the rallies, it sounds like. So, Steve, what are your big picture thoughts on the market?
I think that the tariff war is completely a show. They are just politically making their stances known so that way they can negotiate the best treaty that they can do down the road. It's not going to happen overnight. You're talking about two monster economies, so it's going to take 6, 12 months, whatever it is. And now, right now, everyone's overreacting. Every time they hear the word tariffs, every time they hear the word trade wars, the market goes down 2 or 3%, and it's hitting companies, a lot of technology companies, a lot more than it probably should, because it's not actually going to affect their bottom line a whole lot. And therefore, I think it's a great opportunity to buy into some wonderful companies that are making money and have good products and will continue to make money in the future at lower prices. 6 months from now, trade war is probably winding down. 12 months from now, it's definitely winding down. There's too many political reasons a year from now why there won't be a trade war anymore. So take advantage of it. Make some money. Make a few extra bucks and get in at some good prices because of it.
Chris, what do you think?
You know, I think Steve's right on a couple of notes there. I mean, 12 months from now, the trade wars are going to be a thing of past. I mean, politically, it's going to become even more of a hot button, and it's going to want to be pushed under the rug. Right now, I think the way that these are being handled, you know, Twitter. I mean, who would have thought any of us would be reacting to a Twitter that goes out at 7:30 in the morning and the market is going down 3%? I mean, it's just not in the realm of what normal investors are used to. I think that's going to settle down a little bit, but at the same time, there are some signs here that this market has been getting a little bit, you know, long in the tooth, not only in the rally, but when you look at
I see what you're saying.
Let's
get to some of the stock picks, Steve, before the end of the show. Steve, what are your picks? What are you liking these days?
All right. I like companies that make money. You had a guest on a little bit beforehand that was talking about products you can get behind, that are profitable products, that there's good cash flows, and that companies are going to continue to make money no matter what happens in the world in the next couple of years. Google's, Amazon's, companies that I don't care if there's an economy that pulls back a little bit. When you're looking at these companies, you're going to still use Google. I don't care if the economy pulls back a little bit. You're still going to use Amazon because you can buy products on there cheaper than you can get at other places. Those are long-term plays. I mean, again, we can talk about the week-to-week stuff, and I don't agree with the previous guy with Netflix, but in the long term, I want companies that have huge cash flows that are going to continue to make money and that will be sustained no matter what happens in the short term, no matter what political things happen, that will continue to go. So those type of companies, we are both going to use technology more in the future. We are both going to store more data. We're going to use our phones to do more things every single day in the future. There's no doubt of that. So get behind those type of rallies, get behind those type of companies that you're going to use more as time goes on. Just on a high level.
Chris, do you have Tyson? Chris, you have Tyson and Sempra Energy. Tell us.
Keep it simple here right now. Yeah, keep it simple. If interest rates are going to continue going down, these are good dividend yielders. If you remember the last time we had the situation with interest rates, everybody was going out into the consumer staples company, the utilities companies looking for yield. I think that's what's going to affect the market for the next 6 to 12 months. These are companies that are low volatility. As Steve just said, they're not going to go away because people are still going to use their product. I'm staying away from crowded trades, though, like Google and Amazon, because I just think that if everybody's there right, when we do have the correction, these are the stocks that are going to be picked apart. In their crowded trades right now, too many investors holding them. They'll suffer a little worse than a Tyson right now.
Steve, I got 10 seconds. I know you liked VMware, but I'm most interested in Beyond Meat. Give me 10 seconds on Beyond Meat, why you like it, even though it's run up so much.
I like Beyond Meat because, frankly, you're going to use it more. There's a huge segment of the population that wants that type of product. It's not going to be obsolete anytime soon. And as opposed to the Ubers of the world that have a monster business problem in the next 3 to 4 years, Beyond Meat, it's in a growth market. It's going to continue to grow, and they have a way of becoming profitable, which is important. You need to make money.
Absolutely.
Good. You guys know how to. Chris Johnson, CEO of Johnson Research Group, and Steve Dudash, President of IHT Wealth Management. Thank you both for joining us.